Hi there, welcome to Grain TV. It is Wednesday, March 8th. Let's take a look at the Grain Edge platform and see how the last few minutes of trade shaped up on the close. Grains finished the day in the red. Wheat was the leader to the downside today, giving up 10 in Chicago, 8 in Kansas City. Beans and corn were sort of marking time a little bit ahead of USDA's report tomorrow, but really any sort of rally at the end was sort of met with selling pressure. Corn closing down on the lows of the day, beans closing above the lows, but still not finding much buying interest towards the end of trade. Overall, it was kind of choppy with the more pressure to the downside in today's action, with the trade really squarely focused on tomorrow's USDA report. Welcome back. Let's take a look at some of the news that was driving the market today. Let's start, first of all, with some of the negative drivers that were influencing wheat. In France, the agricultural minister there says they look for old crop carryout for wheat in France to grow from their previous forecast 2.75 million metric tons up to 3 million metric tons. Keep in mind, last summer they had a disaster of a crop, so that is somewhat alarming because they weren't able to tighten their stocks as the marketing year progressed. Basically, they were sort of shut out from any sort of export business, and obviously that led to their ending stocks being higher than what the trade has been focusing on. Other news, Japan stepped back for a week to not go into the wheat market to tender for wheat. Traditionally, they are in the market once a week buying from either Canada, Australia, or the U.S., and traditionally the U.S. has been a major buyer or major supplier to Japan, and so that was also negative as well. Other news out today, there was some flash sales this time for soy meal, 122,000 metric tons to the Philippines, but continued to be shut out in the flash sales announcement was soybeans, which has not seen any sort of significant business. Other news out today, EIA came out with fresh data on ethanol. They showed output was off 12,000 barrels per day. Somewhat supportive, however, was a decline in ethanol stocks. This sort of coincided with the big drawdown in gasoline inventories. But the real news in the crude market was the big jump in crude stocks, up 8 million barrels on the week versus only 2 million barrels that was expected. That really sent the crude market into a tailspin, dropping to $51 for the first time since November, and really has people sort of heading to the sidelines here after a really sort of range-bound trade between 52 and 55 over the last few months. Let's switch gears and look at some economics in action, and in particular what I want to focus on right now is the situation in China, specifically their hog sector and the soybean processing sector. As we've been talking about the last few months, where those sectors go in terms of margins has a big influence on what will be prices for soybeans in the world market. And right now, we continue to see margins for hogs continue to slip lower. We continue to see the soy crush margin off sharply. Look at this chart here. In purple, you have the soy crush margin. You can see it peaked back in December. But what is, I think, more important is what's going on in the hog sector. Hog margins peaked, not surprisingly, on January 17th and have been stair-stepping down with the last few days, another step down in that hog margin. Keep in mind, January 17th, one day later, January 18th, was the high we set on May beans around 1088, and I'm sorry, 1088, and we haven't been back since. So, you know, where this hog margin, where the soy crush margin goes, will have a big influence on what happens in the bean complex. Speaking of economics, let's talk about tomorrow and the USDA crop report. Most traders don't look for any major changes in the U.S. balance sheet. What everyone's going to be focused on is what's going on in South America, and in particular, everyone is looking for a big increase in Brazil's soybean crop and their corn crop because of the excellent growing condition. Take a look at the numbers here. This is what the trade is expecting for soybeans. They're looking for 106 million metric ton. 105.9 to be precise, versus 104 last month, and where they have been steady for the past several months. Keep in mind, a lot of analysts, private forecasters still think the true number is somewhere around 107 to 109. We're even hearing some grumblings, maybe 110 to 111 because it is such a good crop. Corn also is expected to be higher. The number is expected to be 87.7 versus 86.5. This is still quite a bit of an unknown, still a bit of uncertainty because of the second season safrinha crop. Obviously, last year, the second season safrinha crop got decimated because of poor growing conditions in the second half of the season. So there's still a lot of uncertainty abound in that number. But watch those numbers tomorrow, 11 o'clock Central Time. Let's take a look at May soybeans on the daily chart here from the Grain Hedge trading platform. We talked about this yesterday. 1017 is sort of the downside objective. We flirted just briefly below 1020 but closed above that on the May bean contract. So watch 1017 tomorrow. If we get any sort of selling pressure, getting us below that number, we might accelerate to the downside and potentially get quickly down into the low $10 range. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com. Have a great day. We'll talk to you tomorrow about the WASDE report.